This week on the podcast, my somewhat special guest, Jack Rains, is a venture capitalist and author. I've been reading his Substack for a couple of years and always found it quite entertaining and interesting. His new book, Young Money, A Field Guide to Wealth and Purpose in Your 20s, is really interesting and wise beyond its years. I wish I had access to a book like this 100 years ago. When I was in my 20s, I thought this conversation was fascinating. I think you will also. With no further ado, my interview of Jack Rains. Jack Rains, welcome to Bloomberg.
I mean, extra special guest is way too kind, but
so my special guest, my
normally special guest.
I wouldn't want to call him like my young guest. I painted myself into the corner with extra special guests. Once you go that way, you can never go back.
I'll take it.
Here's my special guest. Really, what's wrong with Jack? He's a special guest.
He's wearing a cowboy hat.
That's right. Well, we'll get into that in a little bit. So let's roll back so many years ago to when you're undergraduate studying finance and Spanish while playing football at Mercer. That was before you got your MBA from Columbia. Was there ever a career plan?
Not really. It was just, I don't know. I feel like basically every white dude ends up studying finance unless they're dead set on going to med school, law school, or computer science. So it was study finance, and then I was set to graduate in 2.5 years because we had to take summer classes with football. And I was like, I should double major. Finance and marketing is stupid. I don't like computer science. Let's pick up Spanish because it feels like that could be marginally useful living in the South. Spanish is very assy right now, but it's sufficient. But there was no real career path other than figure it out from there.
That's intriguing. I'm cracking up because I have so many different ways to go with this. First gig out of school was corporate finance at UPS,
yep,
which you described as mostly moving a mouse around the screen and trying to look busy.
Correct.
Tell us about your experience in corporate finance.
Yeah, I mean, to set the stage a little bit, I graduated in December 2019, which was probably the worst possible date to graduate, given that COVID started 3 weeks after that. So I moved to Atlanta in January or February of 2020, start working for UPS. I'm in the office for 3 days. My computer isn't even fully online yet. And then we're told that we're going remote for 1 week and then 1 month. And then everybody had the same experience where a year and a half later, you're still remote. So I don't think it's great to be a 22-year-old who's never had a real job, who's then told you're going to work from home while you have your Xbox and all of your friends are doing the same thing. And it was actually a terrible environment to start learning how to be a worker. And yeah, it was just Zoom calls, Excel sheets, modeling out fuel cost projections and forecasts for UPS for 2022. I was honestly bored the whole time. And to build on top of that, I had gotten into business school out of undergrad. So Columbia, I went to business school at Columbia, and they have a deferred enrollment program where when you're a senior in college, you apply and then you work a few years and go to business school. So I knew that I was going to go to grad school in 3 years. COVID hit. I was super bored working remote, just doing basically nothing. And it just kind of felt like I was in a work from home purgatory for about 18 months.
So having that window where, hey, I know where I'm going to be 18 months from now in September of 2020 blank, what led you to say, I think I'm going to quit and just buy a one-way ticket to Barcelona and travel the world? That's a giant leap, which not a lot of people have the nerve to make. What led to that decision?
So, when I was a kid, I always loved to travel, and my grandparents would take me everywhere.
Your grandma took you on a crazy trip you describe in the book to Savannah in Africa.
Yeah. When I was 11, my grandma, Mama Ruth, I'm the oldest grandkid in the family, and she hit me with the idea that she wanted to take me on a trip, anywhere in the world I wanted to go. I actually didn't know if she literally meant anywhere. I wanted to go somewhere crazy like Africa or Asia, and we lived in South Georgia. Initially, I pitched Costa Rica, and she said, You can, yeah, she said like, that's like a 3-hour flight. And I was like, okay. Tanzania. I thought I had a big map in my room as a kid. I thought it'd be cool to go to the Ngorongoro crater and see Mount Kilimanjaro and all this stuff. So she took me and we went on a 2-week safari and it was awesome. And then in college, I studied abroad in Spain one summer. I went to France one summer with my best friend from college. I did a service trip to Ecuador. Like, I always loved leaving the U.S. And it was kind of a thing in the back of my head where I knew at some point in my 20s it would be really fun to do like a multi-month trip abroad with like no itinerary other than just see other stuff. And I was sitting there. It's like you're working remote for 18 months and you're bored. And then for better or worse, had a fortuitous run trading SPACs and SPAC warrants during the pandemic, which gave me more money than I expected to have at 23 or 24. Where I was like, I mean, it wouldn't cost that much to just go hostel hop Europe and Latin America for a year.
Yeah, I'm glad you brought that up. You're not a trust fund baby in any stretch of the imagination.
No.
You scrape together some money, you fly, coach, you're staying in hostels, you have 10 roommates in these places.
You're just eating like McDonald's or Euros or whatever every day. It was the best. I mean, I got food poisoning one time. It was fun.
More recently, you wrote a story about going to someone's wedding in, I think it was India,
Yep.
and a bunch of people got food poisoning.
Yep.
And it was hilarious.
Well, it feels a little bit like India right now in New York. It's like the air quality today, as of recording, is pretty similar to New Delhi.
Those Canadian fires are amazing. You walk out, it smells like a barbecue.
Yeah,
it's yellow.
It's like we're microdosing New Delhi air right now. It's great. It's good stuff.
Only without the E. coli that you described.
Right.
But let's bring it back to your career. So you do this trip. You go through a couple of dozen countries. You meet people that you're still friendly with. It was really fascinating. And you get to business school. How do you adjust? How do you make that transition?
Yeah, it was interesting. Like, in the back of my head, I kind of knew I had this start date moving to New York in August of 2022. So I eventually quit my previous job, or first job out of college, in August 21. I was kind of like, all right, let's spend a year and just have as much fun as physically possible, knowing that then we're going to go to grad school, then we'll do our career in New York and yada, yada, yada. It was funny because it was at first weird, like I spent basically a full year out of the country jumping around a lot. And then you're in New York and you have like a home base and you have business school is not a particularly strenuous thing, but you do have a set schedule where you have classes and stuff. I loved it though. I mean, I love Columbia. Honestly, I love New York in general, best city in the world, particularly in your 20s. And it took a couple of months to really get in the flow of like living here, and then also like you're meeting hundreds of new people like that. But actually getting integrated, not hard. It felt like a perfect fit.
Really, really interesting. So I'm curious, you learn a lot of things in both your office career or remote work from home career and business school. What did you learn about finance, money, time while you were traveling?
I mean, the biggest thing that really jumped out was, and it's something I write about a lot in the book, like I call it the stage specificity of life. Mm-hmm. But by that, I mean that it's pretty easy to conceptualize money. Like you're taught from like in high school how money compounds over time if you invest it, and it's, you should be frugal and save up money. But what you miss is like, what's the optimal time to spend that money on different things? And the example that I give a lot is like, I was 24 and like sleeping in a bunk bed in a hostel with 12 roommates or whatever. And it was actually just a hilarious setup. Like, it's just a bunch of nonsense. You have a French guy here and then like a Mexican girl here. And it's like a lot of the dorms are co-ed, and it's like summer camp for like young adults. But then occasionally you meet somebody in their like early 30s staying in the same hostel. And it's like, you can almost tell that they notice they're like probably 6 or 7 years too late to have done that type of trip. And like the biggest takeaway from traveling was like, if I really wanted to do this trip, this was the right window to do this. Like I optimized like that phase of my life correctly for somebody who wanted to do that type of thing. And that's kind of what stuck with me the most after is not just being aware of like, what you want to get out of life, but like what things have deadlines where like if that window of opportunity closes, you're just not going to be able to maximize your like fulfillment or enjoyment or like utility from that experience. Like basically everything you do in life has an expiration date for when you would enjoy it the most. And
you can go cheap and cheerful in your 20s,
Right.
maybe even early 30s, but not much past that.
Correct.
So you were also writing before the trip and during the trip. Tell us a little bit about your experience, what you discovered about yourself as you're writing, and why you thought that might be a career path.
So, like, hilariously, when I was doing the whole SPAC trading thing in 2020 and 2021, I had a burner Reddit account called Barmelo's Anthony. It's a play on words on Carmelo Anthony and Xanax bars. It was my name in my college group me. We all had edgy, like, drug-related famous person combination names. I was writing so much stuff about, like, Apollo changed the background header of their website from oil rigs to windmills. I think they're going to take an EV company public through a SPAC, and then they announced a deal with Fisker Automotive 3 weeks later. It was like borderline conspiracy theory stuff, but
it worked.
A lot of it worked, yeah. So I always liked just writing about like stuff I was seeing going on in markets. And then when I was traveling, I tried to get hired by the Morning Brew, the Hustle, a few different like kind of upstart-ish media companies. Nobody would hire me for lack of like professional writing experience. So I just started writing I just launched a Substack and started writing a newsletter, and it was like half investing in finance and half travel blog, like detailing everything I was doing day to day, who I was meeting. And I just enjoyed it. Like, it's writing something I've always found fun. I've always found it a bit cathartic, like putting your thoughts on paper. And it's a good, I don't know. I think it's like a good exercise for anybody to really like distill what you think about a thing, is try to sit down and put pen on paper. So
Daniel Boorstin, the Librarian of Congress's famous quote, "I write to figure out what I think."
Yep.
And besides, at that hour, the bars are all closed.
Yep.
So, until you put it down, until you put pen to paper or fingers to keyboard, it's sort of nebulous and not distinct. Once you write it, there it is in black and white.
Yep. Yep.
So for sure. So you come out of Columbia. What's the first gig you're doing while you're a new grad?
So to step back a little bit, when I was still in business school, I kind of had this like, I think investing and financial markets are interesting. I really like writing. Had like monetized my newsletter fairly well, selling ads, and I was kind of trying to figure out which way I wanted to lean with it. And then I had some publishers who were like loosely interested in me maybe writing a book. So I wanted to leave the book writing door open, and I interned for a venture capital fund called Red Point Ventures. My first year helping them with like building up a newsletter and like editorial strategy and all that stuff. It was like, loved the team there. It was great. My takeaway from that was I should either like go do media, or I should like push to get in like an investing seat somewhere, not split the middle and do like the marketing arm of an investment group. So going into my second year, Sam Rowe,
Sure.
friend of the show, he was like contracted by Robinhood to help them with the hiring for, they were building out a media subsidiary called Sherwood News. We grabbed coffee, and he was like, "I don't know what your plan is after business school. I think you'd be a good fit with what they're building here." And he started telling me about it, and it checked a lot of boxes of like, on one hand, it was kind of an upstart new media thing with like, I would have a lot of autonomy. On the other hand, we were surrounded by the structure of like a big fintech company. So like media is a tough business these days. And like there was a lot more stability there from like financial backing.
Tell me about having a media outlet attached to a large fintech or data services company.
The entire pitch was just trying to like basically make a new age Bloomberg,
Right.
to tell you the truth.
Did you guys get any Hood stock?
Yeah.
So not terrible.
Not terrible. I mean, the issue is I only worked there for a year, so it's not like I got that much. But
Right.
like it, yeah. Like I wish I would have. I wish I would have gotten more, and I wish I would have stayed longer had I gotten more. Is the takeaway from that. But yeah, I ended up joining them during my second year. I signed the book deal for that book the summer after I graduated, so about 2 years ago now. And then I was sitting there, and I just like everything was fine, but I realized after working in a like more structured media environment, I actually I like writing a blog. I like kind of free range putting stuff on the internet, but like I didn't like the actual call it 9 to 5 employed version of like financial media. And it kind of clicked in my head that when I was at that point of investing thing versus like media. I actually probably should have gone investing track, but I was so hyper focused on like, I don't want to kill potential book deal momentum and this and that I took the other one. And I had like a total career panic like almost 2 years ago, like fall 24.
And there is something to be said about the daily beast that must be fed when you're on a regular deadline like that.
It's tough.
Yeah, no, it's brutal. And it's why there's so much content that's so useless because, hey, there are minutes and hours to fill and column inches and the infinite more of the internet.
Yep.
I mean, it just never stops. So that's why we have this fire hose.
Yep.
So you had done Young Money as a Substack.
Yep.
You had done Sherwood for Robinhood. I'm kind of fascinated by an essay you did, How I Lost $150,000 in a Day Trading SPACs.
Yep.
Way back in 21. Tell us about your ramp up in the SPAC world and then the blow up.
Oh, it was awesome. I was, I don't know if you would have checked my like pulse or stress levels at that point, they were through the roof, but like it was crazy. So it's like right when the pandemic hit, I thought I was like the next Michael Burry. I had like $10,000 in my checking account, threw it all in SPY puts. They tripled because obviously the market was going to tank. And I was like, yeah, I'm him. And then, you know, Bill Ackman a week later was like crying on CNBC, say the world's going to hell. And I was like, S&P's going to like 1,000. Let's do it again. Let's buy more puts. You know, I actually, having not really been an adult during 08, I completely underestimated like the Fed and quantitative easing and how that could work.
And how fast that turn is.
My face got melted off. I shorted the actual bottom, and then I basically round tripped $10,000 to 30 back to 10. I had my tail tucked between my legs, and I was like, I'm never trading a stock again.
Did you ever feel the need to reach over to the waste paper basket and throw up?
No, but like if it had been bigger numbers, maybe.
Yeah.
So I'm like, I'm never going to trade stocks again. I put $6,000 and I opened like a Roth IRA, do my one contribution, first year as a adult working, and I don't look at it for a month. And then in May, my friend Jake, buddy from undergrad, was like, do you know what a SPAC is? And I say, no. And he's like, well, if you buy this Desert Eagle SPAC, it'll turn into DraftKings stock in like 2 months. And I was like, so it's like an IPO? And he's like, I don't know, dude. I just saw on the internet, if I buy this, you own DraftKings. And I was like, okay. I went down the rabbit hole and was looking at it. And it's like,
and it's at par. It's before it comes out. Was it trading at 25 or did it trade up?
It was trading so the par on most SPACs is like $10. And it was trading at like 12 or 13.
Oh, really?
Or maybe 15. But the warrants had like doubled or tripled, right? Because all the warrants have a strike price of $11.50. So then I had like traded options enough. I understood like strike prices, expiration dates, whatever. And the thing that jumped out was that warrants don't expire for 5 years, and they have an $11.50 strike price. So I was doing the math, and I watched DraftKings after the merger happened. It ran up to 20. The warrants ran up to $8 or $9. You would have doubled on the stock. But you would have made like 9x on the warrants if you'd bought them at $1, like at peak pandemic collapse. So I was like, okay,
this is easy.
Well, I was just like, SPACs obviously kind of seem like a bubble right now because there'd been like Nikolai Motors had announced a SPAC and there were a couple of others. And I was just like, I bet that this thing is going to this is just going to be a game for a little while. And if I can just pick the SPAC warrants early, I bet I can make money. So Nikolai warrants are trading at $3. I bought $6,000 worth. I made like 12 grand a couple weeks later. And then I just kept rinsing and repeating SPAC warrants. And like 6 months later, I'd gone from 6 grand to 150 grand. And I was like, this is so easy. So then
by the way, that should immediately set bells off.
I doubled down though. It didn't set off any bells because then I was like, okay, it did set off one bell. I was like, warrants are risky, and if any of these deals collapses, the warrants go to zero. I should start buying the shares as close to NAV as possible. So I was in like an online Discord chat with a lot of other anonymous people. We built some web scrapers that would pull every SPAC SEC filing. So as soon as a filing hit the press, like trading halts when news comes out for a SPAC, I would get a push notification, open up the deck, skim it. If it was electric vehicles, marijuana, outer space, sports betting, or renewable energy, I would go all in unless the like valuation of the deal was just egregious. I would go all in, and I knew that the stock would probably pop like at least 30 or 40% because they just did every time. So you get in at 11, your max loss is probably like 5% on any trade, and you sell at 14 or 15. So you're basically risking 5% to make 40%.
Asymmetrical risk reward. That's what you want.
And I did that like 7 times in a row, and then I went from 150 to 400, and like I'd only risked on any given trade like 5% of my portfolio, and they didn't all hit, but like enough did that it didn't matter. And my dad, obviously, I kept telling him what I was doing, and I hit like it was February 2021. And he called me and he was like, you should probably just sell and just put it in like an index fund. And I was like, I can do this 2 more times and I'll have $1 million at 24. I'm pretty sure I can get there. That should have been the screaming
There's
warning.
the bell ringing.
That, and then when he and his brother were talking to me about potentially managing some of our family's money, you shouldn't have your 24-year-old kid who just made 6,000% trading SPACs touching your grandparents' like retirement money. I did not. Thankfully, I said I don't feel comfortable doing that. I'm okay. I was self-aware enough to know that that would have been a bad idea. So getting to how I lose the money. At this point, way too many SPACs. Shaquille O'Neal has a SPAC. Paul Ryan has a SPAC. Like everybody and their mother has a SPAC. And the bubble didn't pop. It just stopped bubbling because there was kind of this pool of money that was chasing every hot SPAC. And then when there's like 100 of them on the market, somebody announces a deal. The terms are getting worse and worse. And the valuation.
You're watching this decay in real time.
Yeah. And it was like by April, May of that year, it's getting tougher. And like a deal would get announced, it might jump 10%. But I was addicted to the rush. So there was a buy now, pay later company called Catapult. 80% of their revenue came from Wayfair, obviously a pandemic darling. And this was at the time when Square bought Afterpay for like $30 billion, crazy price. Affirm went public at like a $30 billion valuation. And like these companies were growing slower than Catapult because Catapult was just a derivative of Wayfair, which is a pandemic darling. They were less profitable. And I was just like, Catapult's going to have their earnings in August. They've had no sell side coverage. I just need like one analyst from like Morgan Stanley or whatever to initiate like a buy. The stock's going to double. I'm going to buy a bunch of warrants at like $1.50. They're going to rip. And then this thing, like I'm going to make $1 million on this trade. This thing had already gone public through a SPAC. Like there was no floor. That deal was closed. It's just a normal company.
So not your traditional SPAC trades that you've been doing before.
No. It had gone public through a SPAC and it's just like a normal company at this point. And I just aped into it with like I think I had like $330,000 at that point, just went all in. And it started like inching down and spiked back up leading up to earnings. Like I had 4 different times I could have gone out with like a 10% loss. And I was just like, I was just pot committed to like, this is going to be the millionaire trade. They missed earnings so badly that the stock fell. I think the stock fell 20% before market open on like August 11th, and the warrants immediately got cut in half by like 50%.
And that's 150 grand.
Yeah, and I'm looking at it. And I'm looking at the like level 2 trading data, and there's a big buy for like 100,000 warrants at $1 or whatever, and then there's the floor collapses under, and I was like, huh. I'm just gonna sell to that entire bid and just eat it. And like I'm getting out before like the whole thing gets rug pulled, which was the right move because I basically liquidated my position pre-market, went from like $300,000 to like 150 or whatever, and I was just like, man, that sucks. Put it in the S&P and then just went to the gym and worked out for like real self-loathing workout for like 3 hours.
You know, that sort of big whackage is a rite of passage of anybody that's ever worked on a trading desk. I don't care if you're at Jane Street or if you're day trading from home. Those losses are just so seminal and so instructive and focus you on, hey, what's my risk management? What's my edge here? What am I really doing? Swinging for the fences, am I really putting 50 or 100% of my portfolio into one trade? That seems kind of like you could read that in a book, but until you've lived it, it's really challenging.
And the issue for me was like the plan I had initially of like buy SPACs near NAV, sell when they pump was like a good strategy. And if I'd stuck with that, even if it stopped working, it's like, okay.
The downside is de minimis.
We made a bunch of money. This trade doesn't work. Just like park in an index fund until if you want
on, right?
Yeah, and then like either come up with something new or just stop. The issue was I was so used to number going up. I was kind of willing to bet the house on doing it one more time. And then I'm confident if I'd hit $1 million, I would have walked away. Like that was just like a benchmark number. That I wanted to hit.
Should know that when you hit $1 million, you would not have walked away.
No.
Junkies don't say one more hit, and gamblers don't say, I just need this parlay to come in,
right?
And then I'm good, because you're always looking for the dopamine hit, for the adrenaline.
I would have found something else to speculate on, but I think I would have stopped trading SPACs had that happened.
Coming up, we continue our conversation with Jack Rains discussing slow ventures and investing in creators. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My somewhat special guest, is that how you want to be? Is that how you describe yourself?
I would say marginally special.
My marginally special guest, Jack Rains, is here. He is an associate at the venture capital firm Slow Ventures and the author of the book Young Money, which we'll get to in a few minutes. So I'm kind of fascinated how you pivoted into VC work. You joined Slow Ventures in San Francisco from New York.
Yep.
Did you relocate to San Francisco and then come back to New York?
Yep. So
I kind of get the sense you're bi-coastal.
I try to make it look bi-coastal occasionally on Twitter. No, I mean, the funny thing was they were hiring in New York and San Francisco, and I applied for the New York job. I met with the partner in New York first, and then one of the GPs in San Francisco, Sam Lesson, I get introduced to him by the guy in New York, and we're on a Zoom call. He'd just come from the gym, super sweaty and disheveled looking. And 5 minutes in,
are you allowed to say that? Is he okay with that?
I think he would agree with it. 5 minutes into the call, he's like, "What do you think of San Francisco?" And I said, "Fentanyl and homeless people." And he was like, "It's a crazy answer for somebody applying to a job in San Francisco." And I was just like, I didn't. I applied for the job in New York, and he was just kind of like, "Well, I thought I was interviewing you for an SF seat," and I was just like. He told me to take a beat and think about it. And I can't remember if I told him on the call or just texted him right after, but I was like, honestly, dude, I mean, I want the job. So I didn't know this is what I was applying for, but if you hire me, I'll move to San Francisco. And he was like, "Have you ever visited?" And I said, "No." So,
but I've been to 25 other countries and 50 other cities. I'm sure I can figure it out.
Yeah. The only difference is San Francisco has so many more AI startup advertisements on the billboards, and they have Waymos, which are awesome. But yeah, and
they are everywhere. We were just in San Francisco a few months ago.
They're so sick.
They're like yellow cabs in New York.
Yeah, they're incredible. I mean, the worst thing about New York is that we keep trying to block Waymos. Let it happen. I'm so pro Waymo. I'm Waymo's biggest fanboy. But yeah, going back to fall 2024, I was in this real kind of career panic. I want to get out of media, and I was I should have gone down the investing route. And then I took a step back, and I had signed that book deal. And I was like, okay. I'm going to have to write a book. I'm going to have to be able to market it. So that means I need to look at jobs where I can still have bandwidth and flexibility to do so, which eliminates a lot of investing-y stuff where there's compliance issues.
No investment banking,
right.
no trading on a desk,
right.
and no portfolio management, or even CFA analysts where whatever you do is disclosable and requires approval, and it's complex.
But venture capital is the biggest, build your personal brand, content helps you source deals. So I kind of honed in on, and I didn't have an investment banking background. VC is more open to non-traditional investing backgrounds. It just kind of made sense. And I had a decent network in that space from Twitter and writing and all this stuff. So I just kind of started pounding the pavement, reaching out to VCs I knew in my network that may or may not be hiring. And Slow happened to be hiring, and I messaged Yoni, the partner in New York, on Blue Sky. That was back when everybody thought Twitter was going to die, and Blue Sky was the thing.
Blue Sky didn't take off, but it does feel like Twitter is kind of ground to a shell of what it used to be.
I think it's starting to come back as of a month ago.
Oh, really?
Yeah, it feels like they changed the algorithm where you can see your mutuals again. So people I actually care about. Yeah, literally last week, Nikita Beer tweeted, they tweaked the algo, so you're seeing your mutual followers. And I was like, dude, that's what it should have been the whole time.
Right.
But anyway, I basically got hired from a Twitter DM and then a last-second flight to San Francisco.
6 weeks from application to starting in SF. Is
basically,
that about right?
Yeah. I didn't know where to live. I went on the Facebook Marketplace, found some dude with an open room, and just hopped on a FaceTime with him. And I was just like, yeah, I guess I'll just take the other half of your apartment. And then I moved there. I just put my stuff in a suitcase and just flew out.
So are you New York based today?
I live in New York now. I moved back here a few months ago.
All right. And how do you work that out if your core office is San Francisco?
So we have an office in New York too, Flatiron, so 20th and 5th. It was one of those things where we were pretty async in San Francisco. We have an office in downtown SF. I was going in probably 4 days a week. So some people were going in a lot. my boss lived in the suburbs a little bit. He would come up sometimes, but I would like take the Caltrain down to like Hillsborough area and like go to his place to like work from his pool house with him. It was a funny setup. But it was like we were async enough, and I also knew that like long term I was going to want to live in New York. I just like, pitched them on moving back and then flying out to San Francisco like every 3 weeks or so, and that's the setup I have now.
New York has a pretty robust technology sector. I mean, we all think of San Francisco for AI, computer, mobile tech, and Boston for healthcare tech. Where does New York land in that list?
I would put New York as the like
Pretty fast rising, right?
for like consumer tech. I would argue it's like number one or close to it. And
Well,
then
you got a big Google office here. You got a big Microsoft office here. You got a giant Amazon office here.
well, and like Anthropic's opening like a 16,000 square foot. Like they're opening a massive office in Hudson Square. Like
Yeah, there's some space there.
a lot of like a lot of what keeps happening is like all these AI companies start there, and then as they move into like bigger and bigger like enterprise commercial business, they expand to the East Coast. And like there's a lot of like sales teams on the East Coast and engineering talent on the West Coast. New York's also like a more social, outgoing city where a lot of the like sales and go to market people would prefer to live here. San Francisco is more insular, and it's like there's just engineering talent from like Stanford, Berkeley, whatever, that aggregates around the Bay. So it's honestly a big part of like engineers end up on the West Coast, and then a lot of the salespeople end up on the East Coast. A lot of the customers are also on the East Coast. So
Really interesting. All right, so I got to start with a few quotes of yours, and we'll plow through a lot of that. One of the things, though, that you said, a quote of yours, junior investing jobs at VC mega funds are really just cold calling.
yeah.
I don't think of VC in those terms. Explain. Like, are you really just smiling and dialing?
Like a little bit. It's funny. Like I don't know if you read Bill Gurley's new book,
Sure.
Running Out of Dreams. So he said something similar where venture capital is 90% sales, and it really is. Like,
But that's true about
Every
everything in finance.
Yeah, yeah.
And I don't know about outside, but everything in this space is you're ultimately asking someone to trust you and give you their business.
Yep. VC, especially at the big, like it's like Slow is a fairly small fund, right? Like we have like total team is like 15 or 16 people, investment teams like 9 or 10 people. But like some of the bigger funds, like I have some buddies that have worked at the like call it some combination of like the General Catalyst type, A16Z type, whatever. It's just a machine, or like Inside is like this too, where like you are managing just like tens of billions of dollars or whatever, and there's so much coverage that it's. I was a little tongue in cheek saying that it's like cold calling, but it is very much like you need to be talking to like X number of people, and there's like metric hurdles on like touch points and stuff. It's not that there's no discernment or anything like that, but it's a volume game, and
they really do try and quantify it and turn it into.
Yeah, it's like the name of the game is you don't want to miss anything that could be something. Therefore, like people should be pounding the pavement, making touch points with anybody who could be starting an early stage tech company.
Now, Slow Ventures kind of famously avoids the trendy hot stuff. No robots, no AI foundation models. What are you looking at work that's kind of interesting? What do you guys get to see that most people are overlooking?
So it's funny. We actually just announced one that's like Robot E, doing like warehouses and fulfillment for e-commerce companies called Cytronic. So we do occasionally touch. They don't make.
But you're
robots.
not doing the human form
right,
robots.
Right. We're not doing any of the stuff that gets clowned on Twitter because it can't fold clothes or do dishes right. I mean, we're like broadly generalist. We've done everything from like we've done just to name some companies over the last 10 or 12 years, like Robinhood, Slack, Allbirds before they pivoted to being an AI GPU company back when they sold footwear. I mean, we have like a hilarious one, Meme Lords Technology, where it's basically a software platform. It's like a basically a marketing tool platform, but for creating memes. I mean, we'll do a little bit of everything. We've done crypto stuff. We have done some like vertical AI stuff. We just like making our calling card. We're not chasing the AI hype. The way that we broadly think about it is there's a lot of VC deals that are trades that are now marked up a lot, but like, do they have terminal value and would they get supported in public markets? You don't know. And a lot of early stage investors that have played those and then sold when bigger funds come in at the multi-billion-dollar valuations and made a lot of money. So like you could argue we should have played that trading game. The bet that we're making is like go for the stuff that's going to compound long-term value that could be like a standalone valuable entity.
How does the sort of dearth of IPOs, although we're in the middle of a period where there are suddenly a spate of them coming out, and more companies choosing to stay private for longer, how does that figure into the VC calculus of, hey, we eventually want an exit and we can't rely on someone else, either from a bigger firm taking this over or some M&A to give us an exit?
It's interesting. I almost think you have to put VC in two buckets at this point, where you have like, we play at the really early stage, which also gives you like a lot more opportunities for exits, whether you sell stakes to like a later stage, bigger growth, like a bigger growth investor once they're in the unicorn status, or you get the acquisition or IPO. If you're getting in a company that's worth $20 or $30 million, there's just like a lot of ways you can get paid on that, versus you have companies like Thrive is probably the most famous one, where they manage like $50 billion now. They own a massive slug of OpenAI. Like they take really big bets in companies that are like, it's worth 10 billion or 100 billion. We think it can be worth 100 billion or a trillion. So for us, we have a lot more flexibility on exits, which is like good because we can be more nimble.
You're primarily seed and A rounds, but you're not doing B rounds or...
We occasionally will with follow-on capital, but it's like 95% seed and A. So that's our sweet spot. And then, so I think for funds like that, I think people, like a lot of early stage funds, should get more creative, where can you exit into a big growth fund coming in at like a $5 billion valuation from portfolio construction? Maybe you should. With the mega funds, it's like, okay, if you're going to do that, you can't really index all of the like $5 or $10 billion unicorns, because a lot of those paper marks would never get support in the public markets. But like Thrive going really deep on OpenAI, or Spark Capital going really deep on Anthropic, those are going to go out at potentially $1 trillion valuations. Like the math works. If you invest $40 billion across a few big funds in something at like a $200 billion valuation, and you get a 4x or 5x, you're returning like tens of billions of dollars, right? So it's like at the early stage, should probably be looking to sell into some of those later stage companies coming in. At the later stage, it's like stock picking. You're basically you have to run a concentrated book of like, there might be 3 or 4 private companies at any time, like a SpaceX, OpenAI, Anthropic, that could go out at a multi-$100 billion valuation. You have to be concentrated in those. Otherwise, the math isn't going to work. If you get those right, you can like 2x, 3x a fund. If you don't, you won't.
Really kind of interesting. You come out of the creator economy. Slow Ventures has been a player in that space. How does your experience help you as a VC? And what does Slow Ventures see in that space that the traditional venture capitalists overlook? So
to give like a little more color on that, we have a separate fund we raised a year ago called our Creator Fund, where $64 million we invest directly in creators, meaning like YouTubers, podcasters, could be newsletter writers. Our bet on that is that like distribution compared to like technical abilities is getting increasingly valuable, where for two things. One, it's easier to build stuff like software because of AI coding assistance. Two, the internet is so loud now that having like a cylinder of trust from your audience gives you a massive selling advantage, because it's so much harder to get attention with like paid ads and growth hacks and all this. That we have this, and like Sam, my boss, came up with this idea a few years ago that like he calls it almost investing in cults, but people who have a true like cult of personality and are a subject matter expert in a particular theme or vertical have a massive advantage on like marketing and selling. So we raised a fund where we literally invest in creators like holding companies, where any businesses they build like off their platform that leverage their brand and platform and all this stuff.
These are 360 deals, covers everything that person does.
Yeah. We
So
basically
it could be a podcast, could be a Substack, could be all of those.
Yeah, and like we aren't really that interested in like how money they make from like ad revenue or like platform revenue or whatever. It's more so, for example, the first deal we did was with this woodworking creator named Jonathan Katz Moses, and he has a massive YouTube channel. He's basically
I know that show. It is shockingly intriguing.
Yeah.
Watching this guy build stuff from scratch.
Yeah, he's like,
it's relaxing too.
Yeah, he's a super compelling guy, incredibly talented, and he's equally good as both a content creator and as an entrepreneur. Like he has a business that's like making like millions of dollars in revenue.
So
And
he builds various things and sells them.
he
But
sells
also generates revenue from the YouTube channel.
right, and it's like specifically has like a tool line called KM Tools, and like we invested money into like his holding company, and that can go toward like hiring people to help with like the content development, editing, content creation, so we can like increase velocity of putting out YouTube videos. Also, like more people to help rolling out new products and a wider product suite of tools. So the bet is that like you put money in that, and maybe like the tool business really blows up, and then a like Black and Decker type of company acquires it, or maybe he launches like another business vertical off his platform that we have exposure to. So but his whole thing is like woodworking, woodworkers. He'll go to like a woodworking festival in Texas. People come out like to come like get him to like sign their autographs. Like he just has a lot of clout in that space. So finding people like that in different verticals that we think have like really compelling opportunities to scale big businesses through that vertical and that audience is like interesting. And historically, people have been very hesitant to back creators, or they back like one business. Like Mr. Beast has a bunch of different businesses. If you back Beast Burgers, didn't really work that well.
Right.
If you were backing Mr. Beast as a whole, like Jimmy's
Did great.
entire empire is worth like $1 billion or whatever. So you want to be like aligned where if they want to change their focus, like our capital is still aligned with that. Like you don't think this experiment's working, move to this one.
And I think it's called CDC. If you haven't seen these computer-controlled woodworking lathes and carves, and they're just astonishing to people. Like you think of carpentry as kind of old school. It is not.
Yep.
It's really fascinating. Coming up, we continue our conversation with Jack Rains discussing his new book, Young Money, A Field Guide to Wealth and Purpose in Your 20s. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My pretty special guest, my kind of special guest.
Somewhat special.
Somewhat special guest. I'm going to write that down. My somewhat special guest is Jack Rains. He is a associate at a venture capital firm and a author. I've been subscribed to his Substack, Young Money, for, I don't know, how many years has that been around?
4 or 5 years.
Right.
5
Let me
years.
know when you get to 30, and you'll be onto something.
Yeah.
But his new book, Young Money, A Field Guide to Wealth and Purpose in Your 20s, I was really taken by it. Not only was it a fun read, but I not only laughed throughout because I just recognized, oh, I did that dumb thing.
Yep.
But it also is so wise beyond its years. It's hard to imagine that the guy who wrote this was 26, 27 when he wrote it.
27 and 28.
27,
29
28.
now.
Last year of your 20s.
Yeah.
So I really found it a fun, enjoyable read about a space that I normally don't play in, Young Money, and there's so many things to talk about with this, starting with, quote, I had considered the opportunity cost of how I was spending my time, and I adjusted my life accordingly. So you're giving the whole game away on page 13. You basically say, hey, time is finite, and how and when you spend it is really important. Tell us a little bit about how you reached that insight back when you were in your early to mid-20s.
Yep. So, I mean, we talked about the SPAC trading thing earlier, but like when I was 23, mainly 23 and a little bit 24, my life basically looked like this. It was you roll out of bed, throw on some sweatpants, grab Chick-fil-A for breakfast, and then you're just like kind of responding to like Slack messages, you're on Zoom calls, spreadsheets, PowerPoints, and you're doing all of it from your bedroom. And it had been like that for well over a year. And then on the side, like you were over here, like, you know, trading options before we jump on this. I had like my work laptop here, and then I had my personal laptop here. And it's like, interesting. Like this SPAC just got announced. So I was spending like, I was like basically fake working while just trading stocks all day. And then like in the evenings, you have like your entire net worth and some speculative SPAC, and you can't even sleep straight because if futures tank, you think you might lose $100,000. And so I was almost in this like self-induced holding cell of like I couldn't go anywhere really because of COVID, and I was stuck at home, and then I was just watching screens all day. And thankfully I made some money from it, but I just became really aware around the time I was about to turn 24 that I had just spent the whole last year of my life not really doing anything, especially like call it like personal relationships, whatever. I was probably a pretty terrible like boyfriend, friend, checked out son, grandson. Like I just wasn't like I was not in control of how I was spending my time at all. I was kind of like a prisoner to like work and COVID and stock market.
Which is kind of crazy because during the pandemic, you're no longer commuting, you're no longer on the same schedule. If any of us had a little more prescience, we really could have taken full control of our day.
100%.
Because nobody's looking over your shoulder at what you're doing. You could come and go as you want as long as you got your work done.
Yep.
Whenever, however, everybody was fine.
Yep. Which is so, I mean, so the stock trading thing I did, like that would not have been happening if I was in the office, probably. At least not as much.
But what was fascinating as I was reading this, because I started out trading,
Yep.
is you nailed the phrase. You're a prisoner to the screen.
Yep.
You really can't leave your desktop. If you're on a desk, at least someone could watch a position for you. Hey, I got to go leave for 10 minutes. Can you make sure this doesn't blow up on me?
Yep.
If it hits this, get me out. You could do that, but if you're doing this from your bedroom and you have a lot of positions on, you have no other bandwidth for anything else.
It's just push notifications on for everything. You go to the gym, you're checking your phone every 2 minutes. It was just like a little bit nauseating.
Right.
And
exhausting.
Yeah. And like I honestly just felt pretty like mentally exhausted from the like always being on. And I just kind of had enough. And I also found my job pretty unfulfilling, and I knew I was going to leave it in a year. And it was just like all of these things came to a head, and I was like, okay, like let's be really intentional here about like how do I want to spend, like if I know I'm going to grad school in a year, like how do I actually want to spend the next year? Is it keep going in the motions of the job that I know I'm going to leave to go do something else? Is it like try to like trade back the money I just lost on that trade gone wrong? The thing I kind of wanted to do is like honestly just go have an adventure, having just been cooped up for a year and a half. And yeah, so that like it was just like all of that came to a head, and I was like, I should just, I mean, it's like the opening line of the book, just blow up my life and go do something crazy. And that's kind of what I did. And I went to Barcelona.
You hit the eject button. The concept of time comes up over and over throughout the book, both generally and specifically. One of the things you write about is defining decades differently, and about the opportunity cost of your 20s. A lot of people who just buckle down and grind it out through their 20s, you say that for many people, that's a trap smart 20-somethings fall into. Discuss that.
So I think this is especially true in the like call it hyper competitive like New York, San Francisco, maybe like Chicago, DC areas where you're surrounded by very smart people who went to really good schools, and they go into like at least for like a early 20-something high paying job, but you're also objectively pretty stupid. You don't know anything. You like don't like know 22, like especially guys. Like we're all idiots.
Pretty stupid.
Yeah. And
tell me when I get to grow out of that.
I don't know. I mean, you tell me. You're sitting there and it's like, okay, like what do I optimize for? And the obvious thing is money, and the like derivative of that is status, right? Where high paying jobs are typically higher status jobs. And I think it's when you don't have anything else, it's like a North Star, you kind of go for like the like ambitious thing that will pay you well, that sounds impressive over and over again. And like, to be totally clear, there's nothing wrong with that. And that's also much better than like being a bum and not doing anything. But you almost, if you fall into that trap of like having some expectation of what you should do without it actually being like your own original thought, like, oh, I want to go do this, you almost become, instead of being like the protagonist of your own life, you're just kind of like filling a preordained role. Like you're almost like an actor, right? Is how I think about it. And
in someone else's play.
Right. And I think the thing, like, I think the implicit bet people are making when they do that is I will like earn enough money and hit a level of stability where I can hit eject, which you can do, but you can't buy back the opportunities that you would have had in your 20s when you're in your like mid 30s.
So another quote: "There's no saving time. There's no investing time. There is only spending time." And sentences like that is why I say this book is wise beyond its years, because I know people who figure that out in their 50s, 60s, 70s,
Yep.
not in their 20s. So kudos to you for getting there. To tell us what led you to that conclusion, and how much did the pandemic lockdown accidentally lead to these insights?
I think I became much more introspective, much younger because, like, I had roommates then. Like, I just wasn't spending like that much time in a normal day to day. And like, I'm a very like sociable guy who like likes to hang out with people during the day. That gets removed, and you're just in your head a lot, and you become really reflective of like how you're spending your time, what you're motivated by. So it was just like this. Again, I don't like this book probably wouldn't have happened if COVID didn't happen, because most of these like reflections were downstream of this whole just being like kind of in like an isolated stage of life at a point where like you should really just be like in an office grinding. So I think that was a big part of it. Hilariously, I mentioned like the second chapter of the book, I used to be terrified of flying and like horror. Like I'd fly all the time now and I don't care, but for some reason turbulence just like kicked my ass when I was younger. And I was on a flight to Colorado about a year into the pandemic for a ski trip. Plane was basically empty. It was awesome. We had a super, super turbulent takeoff, and it was just bumpy from Atlanta basically all the way to like Kansas City. And I was just sitting there thinking the whole time, we're totally gonna die. This thing's going down. We're gonna die. Like I'm 23. It's over. I'm dead. And we obviously landed. I didn't die, but like again, totally random, but just something about that put that thought in the back of my mind. Like, well, like at some point you are gonna die, and it's not like up until then I just thought I was gonna live forever. Like I'm not stupid, but
you don't really think about that in your 20s.
No,
when
it's not a
most
pressing
people are in
thing.
their 20s, they're immortal. You're
Yeah.
not thinking about, well, one day I'm going to die.
Yeah, and that became like a forcing function for like, okay, let's work backwards from. I finally got over the fear of flying, but it's like, all right, like we are, we're on the clock, and what do I want to do with it? And so it was like a complete fluke from a turbulent flight, kind of forced a lot of introspection that had been bubbling under the surface for probably the prior year. I was like, all right, like I should be doing what I want with my time rather than just letting inertia kind of do its thing. And it was that like, call it like awareness of mortality that became like a forcing function for basically what I've done in the last 4.5 years since then. Like, be in control of your time. Don't be like a passive participant in your own life.
The difference between money and time is that money is both infinite and fungible. Time is neither. This is a philosophical concept.
I consider myself a bit of a philosopher.
Okay. I'm with you. I'm there with you. What's your conclusion when you realize that money is both infinite and fungible?
I think you like need to be really aware of how much money it takes to get what you want out of life at various life stages. To your point earlier, you can kind of scrape by in your 20s, maybe early 30s, and like still enjoy yourself. And the older you get, the more expensive it gets. Ideally, you're making more and more money over the course of your life as well. So like my conclusion on that is it's like counterintuitive financial advice, but like young people shouldn't penny pinch so much if they have like fun, interesting stuff they want to spend the money on. The caveat to that is like you should put yourself in a position where there are like high income outcomes from that over time. But like it's okay to be 25 and not be rich if it means like spending money on fun stuff with your friends, right?
So you're not a fan of the FIRE movement, the early retirement movement?
Not when it's taken to the extreme. I think that the core idea of like having enough money saved up where like you control your own destiny is healthy and good and admirable. I think when you make the accumulation of capital to like escape the labor force as like an end goal, you just set yourself up to be bored. And almost beyond that, when you like over optimize for FIRE and your whole thing is like, I want to opt out of work, you're probably going to hit that in your like early 40s when all of your peers are peak work. You're not going to be able to relate to anybody after a couple of years. Like there's a lot of, I think, when you take the FIRE movement too far, there's like social costs to that are harder to see when you're looking at a spreadsheet. But it's just like and you have to forego so many things you would probably prefer to spend money on in your 20s and 30s to hit that. It's just not. I don't think you should like go into crazy debt, and you should max out your 401k if you can and all this stuff. But like you shouldn't pass up on life to accumulate cash to be able to opt out of another part of life, being work, is kind of my take on it.
No, that makes a lot of sense. I love this quote. Many of life's adventures are adventures only because you're 22 and broke and stupid, and you're surrounded by other broke, stupid 22-year-olds. This is a feature, not a flaw of being young. Lean into it.
Yep.
Tell us about how you saw that. What is it about being 22 and broke and stupid that has to be embraced?
So, like, I mean, I spent that whole year of being, I guess I was technically 24, but I was with a lot of 22-year-olds who were like, this whole like hostel hopping thing's hilarious, right? Because it's basically a bunch of kids like studying abroad. It's a bunch of people fresh out of college. It's a bunch of Europeans taking a gap year, a bunch of Americans fresh out of college, and then a bunch of like, call it 23 to 26-year-olds who worked for a couple of years and took a break. And you're all just like in bunk beds. Everybody has a shared goal of like, I'm just trying to have cheap fun for a little while. And it makes every situation really, really funny. Like some guys like want to go from Sevilla, Spain to Paris, and they're trying to game out like it's $200 to fly, but if we take a train ticket and then sleep in a train station for 6 hours, we can get there for $12. And
avoid a hotel room.
Right, and avoid a hotel room and extend our European trip like 8 more days, right? So, or you have
and
like...
you did that, right? You went from Barcelona to where in Europe?
I mean, I covered... I was there from August to December, and then I went to Latin America a month later for a few months and back to Europe. And in that August to December thing, I think I went to like 19 different countries in 4 months, and it was just... There was no itinerary. I would just go somewhere, and then I would meet some people, and they would say, hey, dude, we're going to Prague next. Do you want to come? And I was like,
sure.
For sure. And I meet this guy in Prague. He's like, yo, I heard Budapest is great. I'm like, all right. And then somebody's like, we're going to Krakow, Poland next. I met a kid at a hostel in Krakow who pitched me on his startup in San Francisco a year ago. Like, talk about weird small world stuff. But it was just like, I went like pure optionality for a year, and it was just like anybody I meet interesting that's doing something cool, I'm gonna go with them. Like, oh, I heard Tromsø, Norway, you can see the northern lights, let's go dog sledding up there, and like you do that. So the ability to just like cast a really wide net, because when like cheap thrills are like having to sleep on a train or like have a bunk bed with a stranger, it's just like it's fine. Like when you're a kid, you just don't care. I'm still in my 20s now, but that would just sound awful. Like, I don't want to be in a room with like 12 strangers and worry about my stuff getting stolen. That sounds terrible. But
when you're 24, you got nothing to get stolen anyway.
Yeah, it's
right?
like, what are they going to take my backpack? I had a couple like Zara t-shirts and flip-flops. Sick. Like, I'll go play poker and win $20 and go buy another one. It's fine. So, and there's versions of that play out with everything, right? Like, I don't think everybody has to go backpack Europe, but like you got to San Francisco and there's like 24-year-old startup founders that are sleeping in the office with a bunch of their buddies, and they're having a blast. Like they're in objectively like horrid living conditions. They don't even notice because they're like 23 or 22 or whatever. Like you can just really lean into like adverse living conditions and find them enjoyable rather than like, they don't like take away from your life. They create really funny stories.
I'm always fascinated by the pursue your passion recommendation that so many people make. You say pursue your passion is terrible career advice.
Yeah.
Give us some color on that.
So
and you're giving this from someone who is pursuing their passion.
So my like more specific take on that is you shouldn't bank your income on a thing you're passionate about. The example that I give is like, I love writing. It's a thing that like I've enjoyed. I'll do the rest of my life, whether it's books, blogs, like it's something I'll always incorporate. My like initial job out of business school was columnist, podcaster, media guy, like effectively a media startup. And I actually found it stressful where like every single day I had to like put something out. And then I also was sitting there thinking, this is draining the fun of like writing. Like I wasn't monetizing my blog. It was just a thing that I liked doing. And all of a sudden now I don't have energy to work on that fun thing because I spend all that energy on the thing I'm paid to do. So the issue with like chasing your passion is one, a lot of passions aren't that lucrative. Two, the second that your paycheck is dependent on you doing that thing over and over and over again, it can start feeling more like a chore than like fun. So the actual advice I have is like pursue stuff that you're pretty interested in that can pay you, whether or not you're like most jobs are boring for a lot of the time. So whether or not you're passionate about it, a thing that you're like interested in and like have an inclination for and have some skills at, go do that for a career and then use that to like subsidize your ability to work on the fun stuff. Like like writing books and blogs is like a thing I want to do independent of the financial outcomes from it. I pivoted from media to venture capital because like I like the offshoot opportunities of investing in tech companies, and that's just like a better world to be in for a career path.
Last question before we get to our favorite questions that we ask all of our somewhat special guests. How do I know I'm making the most of my time?
So the last chapter of the book is called Are You Having Fun Yet? Which I think is like, I think fun is an underrated barometer that you're actually doing the right stuff with your life. And it sounds silly at like first glance, but my take on it is I think the definition of fun and what you find to be fun changes as you go through life's different stages, where when I was like 23 or 24, it was just doing dumb hostel hopping stuff and like getting drunk all the time or whatever. And it was great. Now I get drunk a lot less of the time. It's still slightly a little bit more refined though. But like, once you get a little further in your career, like having real career success and making strides is like a source of like joy and personal achievement. When I was in college and playing football, like football objectively sucked, but like I like playing college football really sucks. And anybody who's played it will tell you that. But it's like
by the way, the description of the workout routines and the 6 a.m. wind sprints and but when deep into the season, the coach rains, we get in there.
Yeah, it's like an incredibly like it's like going from a walk-on to be putting on scholarship and then like getting made team captain my senior year. Like that was a much cooler, fulfilling moment than like anything I did before or after it. Like, and I think it was because it was really, really hard, right? So
and a real sense of achievement.
Yeah, like it was a hard thing, and I'd like executed on it. So. But it was fun. So my kind of definition of fun is if you like find joy in the suck, then you're probably doing the right thing. And like that could be being like groggy and hungover, like on a park bench in Spain, but you feel like you're living out an adventure. Or it could be like going after like a really ambitious career and like excelling in it. And it's, I think a lot of people, as they get further in their careers, they keep chasing that ambition high off of that to the detriment of like their family or other parts of their life. I think a lot of young people like just start like I think the biggest mistake you can make is like keeping a prior version of you's like benchmark or idea of what they should be doing with their time and trying to like force apply that to a future version.
You have to always evolve it over time.
Or trying to pull forward a future version too early in your life at the expense of the fun stuff you want to do now. And I think just having a very, very strong sense of like what are the most important things right now that bring me fulfillment, and then going after those is the recipe to a good life.
And the sequel to this, Find Joy in the Suck, is a great book title.
Maybe I should call it like middle-age money once I get to my like 30s and 40s.
Well, you could do something every decade. You have a built-in model, young money.
Slightly older money.
Right.
Like
middle-aged money, old
money.
man money. You got a whole run of things.
Yeah.
All right, let's jump to our favorite questions that I ask even my somewhat special guests, starting with, you're still young. Tell us about your mentors. Did anybody really help shape your career?
Yeah, I mean, the early mentors would have been football coaches in high school and college. Defensive line coach Harold Brantley, he was the man. Like he was actually the one who pushed me to the point that I could play in college in the first place. And then my college defensive line coach Kenny Baker was like, I came into college playing in a small private high school and thought I was the and then I got to college and just got wrecked for like a good year. And I was like really
bigger,
close
faster, stronger, or you just didn't know the game as well and didn't have the skills, or some combination?
Like it was like I just had to get better. It was like
better shape, better skills.
I needed to get stronger and just be able to like react to the game on the field way faster. And I just wasn't the processing speed and the just size weren't there yet.
People don't realize the quality of play at the college level, it's astounding.
I mean, we played Alabama, Little Mercy University. We played Alabama and Auburn in the same year.
That's like a
pro
team.
You want to talk about seeing like pros.
Monsters. Yeah.
We almost beat Auburn. We were down 7 in the fourth quarter. But Alabama, Jalen Hurts, Tua, Mac Jones, smoked us. They had Calvin Ridley, all-pro receiver who briefly had a gambling problem, but he's back as their punt returner. Guess who started on the punt team, was getting juked out of his shoes like 20 times because we punted so much? Me. But defensive line coach Kenny Baker was like, I worked really hard, and he could tell I did, and he was very encouraging in that, like, keep the work ethic up, and, like, you will develop, like, you will catch up to the point that, like, if you keep that work ethic, you'll be able to play. And he was right. By my third season, I was decent. And by my last season, I was objectively good. Like, I was never going to be an All-American, but I was, like, a starter and was, like, a very solid player. But I could have easily quit and transferred to Georgia and, like, you know, done the fraternity thing in SEC school, which would have been short-term more fun, but long-term less fulfilling. So football coaches, post-school, it's funny, like, especially with COVID, my early mentors were like kind of people I found through Twitter. Like, I remember when I read The Psychology of Money, I thought it was like a very profound book, and I just like digested everything Morgan Housel published. And then a year after that, like, I remember when he followed me back on Twitter, I was flying from Sevilla, Spain to Manchester, England, and I looked at my phone, I was like, oh, this is really cool. This is really cool. And then when I moved to New York, we like hung out in person at Collab Fund's office, and like great guy. But I would say, like, as a somewhat career / just aspirational, him and Tim Urban were like my two favorite bloggers from the kind of like.
You referenced Tim Urban in the book, but I think you referenced a piece of his, and I was surprised you didn't reference the piece on optionality, the sort of chart with the black lines and the green lines.
Everybody steals it on Twitter.
I find that piece to be so interesting because, you know, one of the things about getting old is some of your optionality goes away because you don't have, hey, this is a 25-year project. Do I really have 25 years? Like, what am I going to be doing at age 90? All right, maybe a 25-year project isn't the best thing for me. Or at age 80, best thing for me to start. But I laughed at a lot of your references because I'm familiar with many of them. They were really good. So you mentioned Morgan. Any other post-college mentors you want to bring up?
Yeah, I mean, I'd say my current boss, Sam Lesson, great guy. I mean, he's had a very cool career, right? Like, he started a company in his 20s in Brooklyn, ends up getting acquired by Facebook, like had a successful career at Facebook. And then like co-founded the venture fund I work at now, right? And like he's like, it's funny. I feel like a lot of people in my bubble of like the late 20s have this like, is this what I want to do with my career? You kind of hit this inflection point of like, you should pick a thing that starts compounding. And like his take has always been like, you should just want to work with like really interesting, smart people you respect and like work on interesting problems. And that's a pretty good recipe for finding career fulfillment and, you know, if a couple of things go right, like financial success. But like, I don't know, he's done like a few different things and now like has like a objectively, like if my lifestyle and like life is set up kind of like his in my 40s, I'd be very cool with that. Like he crushes.
So you mentioned Morgan's books. Tell us what you're reading now. What are some of your favorites?
So I just started reading this book called 1873. I think it came out pretty.
Liquad Ahmed?
Yes.
Yep. Who won the Pulitzer for I forgot the name of the 4 central bankers that his first book was about.
Yep.
That is literally at the top of my queue, ready to go. How are you liking it so far?
I'm about halfway through, and it's like very good and interesting. I mean, the thing I've done this from time to time. Like I hadn't read much over the last year while I was working on that.
Yeah,
and now
it's a killer. Writing is a killer.
Yeah, you as someone who's written books, I had so underestimated. Like I have much more respect for other authors after going through that.
Not only can't you read books, you can't blog. You can't. It just sucks up so much bandwidth.
Yeah, it's like all your free time goes to that. But something I've always liked is I've always been a big biography guy, or like certain moments or events in history, because you can get the chat GPT, whatever. People who can pull a story together in 300 pages of a thing is so fascinating. And with like 1873, like reading about the stock market speculation in the like Vienna, Austria stock market in the 1870s, and then you're just pattern matching that against like what I saw with retail investing in 2020, 2021. You just see like human behavior playing out cyclically 150 years ago is just really, really interesting in like a, totally different time and market and paradigm, but it's the exact same thing.
Lords of Finance was his first book that won the Pulitzer. I'm excited about that book. Any other books you want to mention?
The Infinity Machine, the one about the DeepMind founders. It was by Sebastian Mallaby, I think. Anyway, it's like, as far as AI is now the thing everybody cares about, he did a really good job of like how LLMs even became a thing in the first place, and how like this just group of like British researchers who've been holed up in London the whole time kind of kickstarted this whole AI boom. And even though Sam Altman, Elon Musk, they aren't like main characters at all, you're getting these interesting anecdotes of how like OpenAI came together and how there was like a bit of a coup within OpenAI, and then Elon leaves. It just did a really good job of framing like the current moment in time and how we got here. But those are like, I read both of those, or been reading both of those in the last month and a half. They're great.
Interesting. What about streaming? What are you watching or listening to? Give us your favorite.
Hilariously, on the podcast front, I don't have any shows I listen to regularly, but I will selectively, if there's like a guest that I find interesting for whatever reason, it's everything from tuning into like Josh and Michael on the Compound and Friends, or like Tim Ferriss's show, or some of Scott Galloway's stuff. I'm so much of I have people who I think are good interviewers. I don't care about half the people they talk to, but occasionally they'll have someone where I really want to hear that, because I think they'll pull out good questions. Like, I don't know, like Michael Lewis on Tim Ferriss, really good episode. Or there's nothing I listen to specifically. Streaming, I did like that movie Obsession. I thought it was phenomenal. It was the one that like went mega viral, out of indie film that went mega viral out of nowhere.
Who's in it? Or who directed it?
It's the I can't even think of the guy's name. He got his start on YouTube. He does a lot of short form comedy, but it like blew up, and it was the one about the guy who like breaks the stick to make the girl, like he makes a wish that the girl falls in love with him, and then she goes full psycho. Anyway, it went like nuclear on Twitter, Instagram, TikTok, whatever. Pretty good horror film. Thriller. I liked it.
Final two questions. What sort of advice would you give to a recent college grad interested in a career in either writing, content creation, or venture capital?
So my take on all the career stuff for that is like, I think that one of the higher leverage things you can do is just start a blog and put your thoughts out there, even if you have 5 people reading it, 50 people reading it. I think that, especially with AI becoming more and more of a thing, it's easy to like resumes are becoming increasingly meaningless, both from like the odds of somebody actually looking at your job application when you send it in cold are very low, and the ability to like lie, or like you can make 100 different resumes with LLMs based on the job you're applying to now, versus when I was in college, you always tweak your cover letter or resume per job, and it's pretty tedious to do that when you're doing it by hand. You can make 1 million at once, right? So having some like proof of your thoughts on thing, or you've articulated ideas online that show how you think, I think carry a lot more. They've always been important, but like stand out a lot more now with AI. Or if you like, AI coding assistants are really good. Like anybody can access them to build stuff. So just having a portfolio of like written work or stuff you've built online that shows that you took interest and initiative in a thing and like put yourself out there, super useful. I mean, my take on career stuff in general is like, if you can go into investment banking or consulting right out of undergrad, it's still probably the right move, just from like getting trained on how to work hard. People who work at Goldman from 22 to 24 are typically more competent than other people. And for all my stuff about like, you should go take risk in your 20s, the caveat on that is like, you should have a couple of prestige stamps first. Like Columbia Business School was a prestige stamp for me. I enjoyed it. I learned a lot. The main reason I went was like, I went to a somewhat no-name undergrad. It's not like I worked at a marquee firm out of undergrad. Like, you want to get a couple of like, I have like, somebody's de-risked me as an individual, then you go take the shots that you want to. So like it's like, have a collection of like independent work and thoughts that like you can share like in real time, and then I think it's important to get 1 or 2 prestige stamps before you go jump off and do your own thing.
And yet in the book you talk about what a misfocus it is, hyping on status, and why that whole game is so challenging.
So the status thing's so nuanced. I think that if you treat status as an end to itself, you're going to be incredibly disappointed. I think if you treat status as a thing that like you can acquire and leverage to actually do what you want.
A means to an end.
Yes. Like if the trade is, I'm going to go to an incredibly competitive school and spend 2 to 4 years working in some version of like Goldman, Blackstone, McKinsey, whatever, and I can come out of that and do anything, that's very much worth it. But you don't want to be the person who, like 10 or 15 years into their career, never really figured out their thing, so kept chasing status as like a vanity project.
Makes a lot of sense.
It's like, I say status as diminishing returns, or like once you have enough of it, it gets marginal after that.
You're good. And our final question, what do you know about the world of investing today? Might have been useful back when you were locked in your bedroom trading SPACs.
I underestimated how much retail investing is like a permanent fixture in the market today. I think it compounds from like, and this is all like public market stuff, but like pod shops trading quarter by quarter are like more and more of a thing. Passive investing is more and more of a thing. You could argue that true like price setters, being like fundamental long short funds and like long only mutual funds, are less of a thing. So it's created this thing where you have like a lot of like very short term trading on like whatever alternative data, quarter by quarter data. And then you have a lot of passive stuff. And then a really big active group is like retail investing is a thing. Like GameStop, I thought was a one-off fluke. It wasn't. Like open door, short squeeze out of nowhere. You're seeing like random companies will just pop off like 500%, which makes it like Dan Sondheim was on a podcast with the Collison brothers, the Stripe founders, a couple months ago. He was talking about how they changed like how they position their shorts now at D1 Capital.
Because of that.
Because you could be fundamentally right, but guess what? Fundamentals don't matter if the borrow rate's through the roof and then the stock like 8x's and you get blown up, right? Like ask the Melvin Capital guy about fundamentals when his fund got blown up, right? Like at the end of the day, the only thing that matters is making money. And I really thought a lot of that was a 2020, 2021 thing, and it was COVID and people were at home. We're seeing so much stuff with like random speculative, like nuclear reactor, like a company Oklo went public through a SPAC. It was like a Sam Altman-backed company. It was worth like $40 billion. I don't think they have a functional reactor yet. Like,
are you suggesting that sites like Reddit, Wall Street Bets still carry the influence they used to, or has that attenuated and it's spread out to different areas?
I would argue that they almost carry more weight, because I think that like
really,
I think this is pure speculation, but I think that they're now increasingly a thing that like call it like institutional traders, quant funds, whatever, will like look at as a data source, where if something spikes on one of these sites, they'll play the momentum and like it makes these bubbles go even further than they used to. And everything happens so fast now because like the speed that information moves on the internet is just instantaneous, that like a bubble that might take like months to build up and then collapse could happen within a week both ways. So it's just like the whole like internet spread of information faster and faster. It's all like derivatives, like retail investors getting in the market and then yapping about stuff online. That's just never going to stop.
Right. And it's so funny because everything old is new again. Back in the day of the Yahoo message boards.
It's like the late 90s. Yeah.
Like iOmega and that sort of stuff. Nothing has changed. It's just how much faster.
Well, and it's like zero commissions now. It's like
and it's in your pocket. You don't have, let me go home and call my broker. Doesn't.
And now there's like, we have prediction markets and sports betting on your phone. We have removed all friction from people putting money at risk to do stuff. And we've made,
regardless of how dumb or speculative it might be.
And the speed at which you can communicate what you're doing is now also instantaneous and free. So you just have people constantly going risk on whatever for whatever reason, and then everybody else knows it. That's only going to keep accelerating. And I underestimated that.
Except it kind of sounds like a very late stage bull market.
Could have said that in 21, and we were right. 22 was kind of a bear market. Then AI happened. So it's like, I just think market cycles in general will keep happening faster and faster because it'll collapse, people get blown up, and then somebody starts running another thing. Like I just think it's going to get more and more violent.
I have a pet thesis that the giant reset, the giant fiscal stimulus and crash and recovery in 2020 was like a reset and extended the bull market another 5-10 years. But anyway, Jack, you were more than a somewhat special guest.
Thanks.
This was really great. Thank you for being so generous with your time. We have been speaking with Jack Rains. He is the author of Young Money, A Field Guide to Wealth and Purpose in Your 20s. If you enjoy this conversation, well, check out any of the 653 we've done over the previous 12 years. You can find those at iTunes, Spotify, YouTube, Bloomberg, or wherever you find your favorite podcasts. I would be remiss if I didn't thank the crack team that helps us put these conversations together each week. Alexis Noriega is my video producer. Sean Russo is my researcher. Anna Luke is my podcast producer. I'm Barry Ritholtz. You've been listening to Masters in Business on Bloomberg Radio.